Welcome, curious minds. Today we're plunging headfirst into something really significant. As we record this, it's July 15th, 2025, and there's movement in the financial markets. Our mission today is to sort of unpack a stack of recent insights, look at a new piece of U.S. legislation, and figure out why it's not just tech news. It feels like it could redefine money itself. We're focusing this deep dive on some landmark U.S. legislation about crypto, specifically stablecoins. And this isn't just, niche stuff. It signals a major shift. Digital assets moving from the edges, maybe becoming central to innovation, even financial inclusion.
It's fascinating, yeah. And how quickly the whole landscape is changing. This isn't just another regulation update. It really feels more like a foundational shift. Could be a whole new chapter, really, for the global financial system.
Okay, let's unpack that. Before we dive into the legislation itself, what exactly are stablecoins? Because I think for many people, crypto just means, wild price swings, volatility. But stablecoins are different, right?
That's exactly right. They're designed to be different. Stablecoins are digital currencies built specifically to minimize that price volatility. They're pegged to stable assets. Usually it's the U.S. dollar. That's the most common one. But you also see pegs to the euro, sometimes even gold. And this peg, this link, makes them way more practical for everyday use compared to something like Bitcoin.
Okay, so more practical. How are they being used now?
Well, they're already underpinning quite a bit. Things like smart contracts, those are, self-executing contracts on a blockchain. Also, international payments, remittances, and a whole range of decentralized applications, or dApps. So having a regulated framework now, it brings legitimacy, structure. It lets the trustworthy, compliant stablecoins plug right into global commerce investment platforms. It's a big step up.
Right. So if they're already being used, what makes this legislation such a game changer? Because for years it felt like the lack of clear rules in the U.S. was holding things back. What does this new bill actually change? What does it mean for the financial world and for you listening?
Clarity. I think that's the biggest thing. The first major impact is just providing regulatory clarity. And that directly boosts confidence. See, until now, businesses, investors, they were operating in this sort of legal gray zone. Was it okay? Wasn't it? This bill. It aims to remove a lot of that uncertainty. That means significantly less legal risk for companies wanting to get into crypto or expand what they're doing. And the hope is it acts like a magnet for global capital, makes the U.S. the place for crypto innovation instead of seeing that innovation go elsewhere.
And it's not just about big finance attracting capital, right? There's a more direct, maybe human impact here.
Oh, absolutely. That's the second major point, how stablecoins can expand financial inclusion. Just think about it. There are over 1 billion people globally who don't have access to even basic banking, but many do have smartphones. So stablecoins, they offer a way for these individuals to store value, to transact, to participate in the digital economy, all without needing a traditional bank account. This could really empower, say, gig workers, small businesses in emerging markets. It could dramatically cut fees for sending money home, remittances, and, even provide some economic stability in places with volatile currencies. Using these U.S. dollar-pegged tokens, it's about getting financial tools to people who've been left out.
That's powerful. And beyond inclusion, you mentioned it changes how money moves for everyone. What does that look like?
Exactly. The third key benefit is faster, cheaper payments and trade. Stablecoins can make transactions happen, instantly, and almost free. Imagine what that does for cross-border trade. You eliminate all those intermediaries, the banks, the delays. It could streamline how supply chains settle payments, which frees up cash for businesses much faster, better liquidity, and, this is crucial, it really supercharges decentralized finance, or DeFi. Those financial services built on blockchain without the traditional banks. DeFi relies heavily on stablecoins for lending, for staking that's locking up crypto to support the network, and for yield farming, which is basically finding the best returns in DeFi.
Okay, so the foundation is clear, payments are faster. What kind of new things might actually get built on top of this? What does that innovation look like?
Yeah, this is where it gets really exciting. The fourth big implication is fueling innovation and competition. Once you have these clear legal guardrails, you can expect, honestly, an explosion of new stablecoin products and services. Think about maybe big retail chains issuing their own branded digital dollars for instant payments, loyalty programs, that kind of thing. Or fintech startups building, say, gamified savings apps using stablecoins, new loyalty systems, platforms for the gig economy, Web3 ecosystems, the next-gen internet. They could all tap into this idea of programmable money. where payments happen automatically based on rules. Innovation isn't just, like, possible here. It feels almost inevitable now that developers have the green light.
And wrapping up the impacts.
Yeah.
There are bigger picture things at play too, right?
Yeah.
Geopolitics.
Absolutely. That's the fifth point. Reinforcing U.S. dollar dominance, but in this new digital world. By creating a clear, regulated path for dollar-pegged stablecoins, the U.S. essentially strengthens its financial influence, even as everything goes digital. We see reports today, July 2025, about ongoing global tensions, things like tariff threats against Canada. In that kind of shifting world, having robust, regulated dollar-backed stablecoins means businesses globally, millions of users, can still transact securely instantly in the world's main reserve currency. It's about projecting economic stability and influence, just using a digital channel.
Okay, this all sounds incredibly positive, maybe almost too positive. We all know crypto has had its share of bad headlines, fraud, manipulation, collapses. What about the risks with stablecoins, and how does this new law actually deal with those real concerns?
That's a really important question, and yes, it's crucial to understand this legislation is designed to tackle those risks head-on. Stablecoins, like any financial tool, they do have risks. You mentioned them. Potential fraud, making sure they're not used for money laundering, AML, compliance, market manipulation, yes. But these new bills, they come with specific, pretty robust safeguards built in. We're talking about requirements for significant capital reserves, making sure the stablecoins are actually backed one-to-one, regular independent audits for transparency, strict compliance layers to prevent illicit use, and comprehensive regulatory oversight. The goal here is definitely to weed out the bad actors, the shaky projects, while letting the genuine beneficial innovation grow within a trusted framework. We've certainly seen what happens when those safeguards aren't there, and this legislation tries to learn those lessons.
So, pulling it all together then, what's the big picture takeaway? This U.S. stablecoin legislation, it's clearly more than just a tech update. Sounds like it's about building trust in digital finance, expanding access globally, making transactions faster, cheaper, and really kicking off a wave of innovation.
That sums it up well. It really enables everyone, startups, big companies, and everyday users like you, to engage with finance differently, more efficiently, more inclusively, more globally than ever. I think the core takeaway from our deep dive today is that the future of finance, it's looking increasingly algorithmic, decentralized, and digitally dollar-backed. Maybe something to think about as you go about your day is, what does it actually mean for the whole global economy? If the very nature of money itself, how we create it, move it, secure it, is fundamentally shifting right now, driven by laws like this one trying to bring order to this new digital frontier, makes you think.